Hey everyone, remember what we talked about last week? Well, I mentioned that I'm interested in a buy entry if price goes to this fair value gap. Well, it didn't happen as I thought. The price went up without touching the fair value gap. It happens sometimes, you miss out on trades, that's just how it goes. I also said that I wouldn't be trading on NFP Friday because it's likely to be muddy, and that's exactly what happened. It was a messy day. Looking at the economic calendar for the upcoming week, we notice that we have CPI later on Wednesday, which could add a hurdle to our trading this week. But fear not, I'll share my strategy for dealing with this at the end of the video. My protocol for analysis always begins the same way. I start by taking a naked look at the 4-hour chart to get a sense of what's been happening recently. Looking at this chart, it's clear we're still in a wide-range consolidation phase. Let's take a step back and look at this displacement that occurred in February. This is what I focus on in trending markets. It helps me set my bias for the week after it and even a few weeks ahead. Even though there wasn't much of a trend after the displacement, it still helped me find trades within this range. The bearish moves were particularly easier to catch. As soon as the high of the displacement was broken here, I immediately shifted away from the bearish bias. By examining the swing that took the high, there wasn't much movement, every gap was repriced, and there's a lack of intermediate-term lows that control the market. All we know here that it's not a bearish trend. Comparing that bearish displacement swing to the recent bullish one we had last week, the bullish one lacks strength and one-sidedness. It respected a premium array for a few hours, and its upper fair value gap got repriced right away. This tells us that the bullish move isn't as strong as the bearish one. It might keep the price up for a few days, but it's likely to fail and price drops again. So my bias is I'm on the lookout for bullish trades, but I'm not expecting them to be strong enough to reach the highs or keep the lows. And that, my friends, is the nature of consolidation ranges. By the way, if you've made it this far, please consider liking the video and subscribing to the channel. Your support means a lot to me, and it's like a reward for the work I put in these videos. Applying my premium and discount arrays on the chart, here's my plan for the upcoming week. As I mentioned earlier, I'm focusing on bullish trades. My first discount array to consider for an entry is this 4-hour bullish order block. If I get confirmation during the London kill zone on Monday or Tuesday, I'll enter the trade, aiming for the daily swing high as my target. However, if that doesn't happen, and the price continues to drop lower to the fair value gaps below the order block, and I get confirmation during the London kill zone on Monday or Tuesday, I'll enter long, targeting the nearest bearish order block on the 4-hour chart, as I don't expect it to break the swing high if it dropped this low. If you've been following me lately, you'll notice that I've excluded Wednesday in this analysis, as I always say that I hunt for setups Monday through Wednesday. The reason for that is because Wednesday is the day when the CPI release comes out, and here's my strategy to deal with it. In this week's conditions, I'm dividing the week into 3 periods. Monday and Tuesday as 1 period, Wednesday as 1 period, and Thursday and Friday as 1 period. My main plan is to hunt for a setup during the first period, after a confirmation during a kill zone, as mentioned earlier, because it will be in line with the Monday or Tuesday low of the week profiles. My second plan, which I'd prefer to avoid, is trading on Wednesday, because CPI day can be very muddy, and when it shoots up, it doesn't really give a clear entry. I would only be interested in trading if the price goes down to the lower discount array, which is the 4-hour fair value gap. Even then, my entry will be with very little risk, because I know the odds are not in my favor. My third plan is trading on Thursday. If it happens that the price delivers muddy price action from Monday through Wednesday, I'll be interested in a Thursday setup, looking to trade the Consolidation Thursday Reversal Weekly Profile. As we wrap up this lesson, whether you're a beginner or someone with previous experience with the markets, I hope that you found value in this video. Always remember to take this guidance for study purposes only. Trading carries risks, and I'm not a trade advisor. Until next time, stay safe.